Is market volatility a bad thing? Hello, everyone. I'm Patrick Fross with Fross and Fross Wealth Management. Of the other election cycle years. But the question is, should we be afraid of volatility? Is volatility a bad thing? And I would argue that while it does make you feel uncomfortable, because nobody likes that roller coaster ride, volatility is normal. It's to be expected. This chart is one that we share with you on a regular basis. We share it twice a year at our State of the Markets meeting, at our halftime report. And you know what? I wish I could share it every day, because I think this chart is so important. It shows us how volatility is the expectation. It's not the exception. Just honing in on the chart here, just an example, 1980. I don't remember 1980. I was 9 or 10 years old, delivering papers, reading the comics. I wasn't reading the business section. But back in 1980, the market at one point, peak to trough, was down 17%, but yet finished the year up 26%. That's volatility. And as we go through, look at 1987, the market there at the bottom, of course, Black Monday, the big huge sell-off on one day. The market was down 34% at the bottom in 1987. But if you were to ask the average person on the street, was 1987 a good year or a bad year in the market, most people would probably say it was a bad year. But the market really finished up 2%, at least for those that stayed in, not for those that got out and panicked at the bottom. In fact, I remember 1987 very well. I was a senior in high school. I had a economics class, and me and my other buddies are standing around saying, gosh, there was a big drop in the market. What should we do? Should we tell our dads to sell their 401ks and go to cash? And you know, the seasoned economics teacher came over, and he said, gentlemen, this is the best buying opportunity that you'll ever see in your lifetime. You tell your dads to put more money in the market right now. And I got to tell you, a light bulb went off in my brain. It was the best piece of advice that anybody could have given a young person. And it's really guided me throughout the years. And I look at all of these different years since 1980 all the way through present, and we see there's a few years in there where the market was negative, as represented by those gray bars, but 35 out of 46 years the market was positive. That's 76% of the time. The market had positive returns, even though there was a intra-year average drop of 14.2% on average. So if we ever get a year where we don't have a big drop, that's the weird year. Not when there's a drop. This year the market was down around 8%, and everybody was panicking and fleeing for the exits. Well, hopefully not everyone, not our clients, but those that listened, they stuck to it. But a lot of people that didn't have the kind of advice that we're able to give our clients, they were panicking. And yet it's normal. Market volatility is normal.